Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, September 27th, 2014. This is our weekend edition. We're going to take a look at the key indices that we do on a daily and weekly basis, then look at the indicators, and then three stocks we're going to update on: Green Mountain Coffee Roasters, LULU, and Whole Foods. All right, we're going to start off here with the Dow Jones Industrial Average, which was up 167 points yesterday. So we had a huge rally. Let me get rid of, I don't know why that is. Oh, okay, I see what I thought. I had a line in here. There we go. That's a little bit better. Get rid of this. Okay, so I think the way this market's been acting and the way we had this ending diagonal up here, let's blow it out just so you know what I'm talking about. We're talking about this 5-wave ending diagonal of a 5th wave of a wave C, intermediate wave C, within an WXY formation of this corrective move, which since move up since March 2009. So, it looks like the top came in right in here, and then we got this, pretty quick, pretty substantial moves to the downside. Now, what is this? 22nd. This is Monday. Okay, and Monday night I talked about how I thought this was a key reversal formation. Remember we talked about this with how this candlestick formation looked like. Here we got Tuesday, and when we looked at the breadth, the breadth on Monday in terms of the number of stocks up versus down, that type of thing, it was 4.8 to 1, almost 5 to 1 to the downside on Monday. 2.4 to 1 on Tuesday, so a little bit less. So the selling was diminishing in terms of the intensity, let's put it that way. Then we got this rally, and Wednesday night I talked about how skeptical I was of this rally, reflex rally, or the real deal. Well, it wasn't the real deal. It was a reflex rally because the breadth was only 1.5 stocks up for every one down. Okay, and this retraced 61.8% of this move from here down to here. Okay, and then we got this bounce. Thursday morning, actually, if you were watching it live Thursday morning, it was actually pretty stunning. And right out of the gate, this thing just dropped like a stone, and it just started plummeting. And when I saw that first half hour worth of activity, actually, when I saw that first 15 minutes worth of activity, I said, get me out of these Facebook calls, because I was sitting there in Facebook calls, thought Facebook would, was strong enough to counter, and continued one last little pop. And I was like, no, I'm not going to sit here with calls when this market is this negative. And by the way, that's because of this kind of action, what we're going on right now. I am really going to have to be extremely convinced that I've got a very bullish scenario for me to be buying calls until I see like maybe we've gotten 5 waves down and we're ready for a pretty substantial bounce, because nothing goes down in a straight line. So we'll talk about that as we get going here. But anyway, so then the breadth on Thursday on this big move down was the same as the breadth on Monday. It was almost 5 to 1 to the downside. And actually, when you looked at common stocks only, which I could only get that data out of Barron's when it comes out on the weekend, it was even more negative. Common stocks only was 9 down for every 1 up. Monday was 8 down for every 1 up. Okay. And then Friday we got a bounce. The bounce was a little bit more substantial, 2.71 to 1. So almost 3 to 1 to the upside in here versus the 1.5 to 1. So a little bit stronger, but you had more of a bounce to come off of. I mean, this was a much stronger, deeper than this was. Although I guess when you combine these 2 days, maybe it wasn't. I have to look at that. But so now this has bounced back. When I look at from the high here to the low here, notice how this came right to the 55-day exponential or 55-day simple moving average. Okay, right off the 55-day. And so now what it's done is it's retraced about 70, it did 72% to this peak, okay? And there's a key Fibonacci retracement is 70.7, okay? Typically, you talk about 50 and 61.8. Well, one additional one is 70.8. Some people talk about 84 even, but 70.7 is a more common one for a deep retracement. So we're right up into that point. I am looking for this thing to turn and head down to the downside starting again Monday morning. So we'll have to see what kind of action we really do get out of this thing. Let's look at the Dow on the weekly basis. On a weekly, it's, again, the divergences are pretty strong in here on the RSI, this momentum type indicator. So although this hasn't broken down and closed below the 10, it still looks pretty negative. On the S&P 500, a similar type thing. We're breaking down in here. And got to close below the 55 on the S&P 500. And you notice how the 10 is breaking down below the 21. And when we look at the divergences in here, it's even clearer on the weekly. Yeah, this move is not, this move up here to the last move, leg is not confirmed at all. Let's take a look at the NASDAQ on the daily basis. Okay, the NASDAQ also, I mean, it looks like it's kind of rolling over, pretty rounded. Broke down below this support line that I had drawn up here. And this was, what was this, Wednesday? Okay, so Wednesday it bounced off of the low from over here on September 16th. Thursday it crashed right through it. Now it's bounced back a little bit, but again, you're going to get bounces. And the real key is, do we get above Wednesday's bounce? And that's the other thing on the Dow and just the market in general. Do we stay below this Wednesday bounce? Because if we do, then we're continuing this 1-2, 1-2, and we're going to be in a third wave down. Otherwise, we got to reassess what we're doing in terms of our short term, very, very short term. Let's look at the NASDAQ on a weekly basis. I thought I had it up here. There it is. Okay, and again, this looks like, oh wow, this is trending up really, really nicely. Well, when you look at the RSI, which is a great momentum indicator, it's not being confirmed at all. And then this little trend line here got broken by the action of this last week. Okay, and this close is down below. Let's see, what was this close here? 45.38. Yes, we closed below the low of the last 5 weeks. So again, everything seems to be breaking down in unison. Let's look at the New York Composite, and then we'll go to the Russell. New York Composite is, actually a little weaker than the Dow, it seems like, in here, well below the 55-day, and coming down. I think the next support component is going to be down here at 10,557. And this really is starting to look like a double top to me. So little bit of a point. Double tops, I like to see, this kind of width. I hate to see them too wide. They need to be, I think, at least a month apart is the ideal situation. And then they're not really confirmed. I see a lot of people talking about double tops and go, oh, we got a double top or we got a double bottom, and double bottoms in. Well, the top or the bottom is not into the valley is broken. Okay, so when this little point here gets broken to the downside, then the double top is confirmed. And what you expect is you expect the move to go, well, here, let me draw it. This distance, okay, is the distance I would expect, the double top to come down. You can just simply measure this. And what I do is, because I'm using semi-log, so everything is in percentage proportion, I literally take like a business card and put it up against the distance here, and then take it over here and put it down and say, okay, where's the distance going to go? I mean, that's how I do it. Simple and easy. I mean, you don't have to be fancy. Okay, let's take a look at the New York on a weekly basis. Again, similar type thing. We actually have DI minus crossing DI plus. Of course, we got it here too, but then didn't get the follow through. So again, on a weekly basis, you need to see some follow through, which we didn't get back here at the beginning of August to the downside. And the Russell 2000, this bounced Thursday right off of this low in here. Now, this isn't the low for the double top. This is the low in here, okay, if we back this off. Again, a bigger double top, and actually, this may be something more than that, because again, I hate to see double tops too wide. But we'll go with it because we've gotten two points here of support. Key support right here and almost to the penny right here, same thing. So we break down below this, and what is that low? I talked about last time. I think it's 1082. Yes. But first, we got to break through this, which we bounced off of on Thursday, which is 1120 on the Russell. So we break 1120 on Monday. We're going to be 1082 pretty quick. We break 1082, and then who knows where we go. The other point is this trend line that the Russell's broken from March 2009. When you look at the Russell on the weekly basis, which I've got in here somewhere, here we go. You can see that even clearer, it's red line. So now for the first time on a weekly basis, the Russell weekly bar has broken that trend line that has been in place from the March 2009 low. Okay, so, and then we've got this sideways consolidation top that we break down below, 1082, and there we go. All right, so that's the 5 indices that we look at. Let's take a look at the short-term trading index. Wow, it knows exactly where I want to go, and I don't even have this programmed. Okay, so we the reading pretty low, 0.77 yesterday. But again, it's the blue line that I watch, and again, we're coming off this very low reading down in here on September 16th, which I've said seems to be a leading indicator of a turn coming. The real question is, how often does it, well, September 16th, where was September 16th? Right here. Okay, so we got that extreme bullish reading, basically, 3-4 days before the peak. Okay, and now we're selling off. Okay, so let's see, the VIX. The VIX has held up pretty strong, even though, we had a little bit, it had sell-off, but this bar did not look like it's trying to break down at all. And this little swing move that I'm looking at here, when I take this little pivot point here and we come back down and I draw a trend line across that, the thing I'm looking at is I look at this distance and I say, okay, well, the fact we've broken out, have we gone that distance to the upside? And, again, it's like, in this distance and in here, and then I look at this kind of distance, and so I think we got more to go to the upside if we do this kind of breakout. Now, sometimes we don't get it, so there's no guarantees. But let me get rid of that. I can't go back to my mouse unless I get rid of the marking, is the trick with this software. You see how it did it back here? Pivot point, break, swing up, go to the prior, major high, which we almost got there now. The other thing I'm looking at is I noticed this, and I don't know really, I head and shoulders on this. I don't know why you'd have a head and shoulders necessarily on the VIX, but it kind of looks that way, and so I'm just kind of watching that. It's, you're getting this, trend line across the top here. Maybe we break out here. Maybe we're going to go up and challenge this kind of, and if we do that, then we're talking about some pretty heavy duty selling that's going to start getting into the market. Okay, and then the last thing on the indicators is the high-low index. And that's the other thing that's interesting. Okay, so we get this big rally, 100 and whatever, what was it, 100 and some points yesterday? 167 points. Okay, big rally, Wednesday, big rally Friday. And high-low index barely moves. Okay, so we are literally minus 124, almost the same reading as what we got Monday. Okay, so this is not going anywhere, and it's showing that there continues to be a high level of stocks that are hitting new 52-week lows versus stocks hitting new 52-week highs. So the negativity has stayed into this indicator, and again, this is the most negative of the year. This is back December 2013. All right, so, and then the other thing and I talked about the breadth already, so I think we're good on that. All right, let's take a look real quick on Why did I go there? I don't want to go there. I want to go to my window, and we're going to take a look at the ETFs now, if I can find them, which I always seem to lose these things. I don't know why. There we go. Home builders, semiconductor, home builders, financial. We got them right in a row. Okay. So the semiconductor on Thursday, had the big break, not surprisingly. But it still hasn't broken below the September 16th. Okay, so it hasn't broken support yet. So I'll be watching for that. So we haven't seen the breakdown there. The home builders, it continues its negative sell-off down, and based on the trend of lower highs and lower lows in here, I would not be surprised to see this continue down and take out this low back over here of early August. When you look at the financial ETF, Select Spider or whatever, Select Sect, I think they call it, Thursday was pretty negative. Okay, so here was Monday, Tuesday, the reversal bar I talked about, outside down reversal bar on Friday. Okay, Monday, Tuesday, bounce, Thursday, heavy duty. And we got this little inside bounce in here, but this is a pretty negative bar, and it'll be interesting to see, do we get some continuation out of this thing? So that's the strongest that we've seen in a while out of that. Since that July move. So we'll see whether or not we continue to get some more. I'm not sure why I've got this red trend line in here. And when you talk about support, okay, because it's trend line, and it broke it here in August, but it didn't do any damage. It's like it came right off of this area. So when you look about support, why did this come in and get support in here? Well, it looks like there was previous highs over here. So again, that's another point that you always remember, right? When you're looking for support and resistance, you look at previous highs. When those highs get taken out, they should become some kind of floor underneath, and sure enough it did on Thursday. Now whether that support continues to maintain in place, if it gets broken, then you look for the next previous, which would probably be down to here. Okay, so that's the way it's looking on that ETF. The last one I wanted to look at is the high yield fund real quick. Where is it? There it is. Substantial selling in this. So again, the risk off mode is heavy duty going on here. And I'll just switch to weekly rather than pull up the weekly chart. You can see this close this last week was below the close of August 1st. And we're approaching this trend line in here that's in place basically since 2012, and we've broken the trend line from 2009. We did not confirm. The reason I have this red line right here is that is showing how we did not confirm the market. Okay, remember, let's go back and just take a look at the Dow Industrials. And let me zoom out to make it look a little bit better. You can see how we kind of pushed a little new high, and the S&P 500 did the same thing. Well, the high yield bond fund did not confirm. Okay, so it's telling everyone that people are bailing on this, and they're getting out, and they're saying, okay, we need some safety. We're not so risk on type mode anymore. So that's another confirmation of what's going on in the market. Okay, let's take a quick look now at the three stocks we've got. I'm going to take a look at Green Mountain, Keurig Green Mountain, they call themselves now. I still think that we're doing an ABC, okay? A three-wave A, and given that it was three waves, that makes me think that we've got a flat coming on, which means there should be a move, a B-wave move back to the beginning. Well, we kind of got that in here, and this is where I thought that we were getting it. But now I think we are getting an A, B, C. Now, and so now we've gotten weaker. We got this close down below the 10. And actually, I probably missed something here, especially the break of this trend line And let me blow this up real quick. The break of this trend line and getting these closes, especially like 2 consecutive closes below, probably should have had a trade idea where we went, when we broke this low, that we bought puts, and I missed that. And so I'm just kind of sitting watching this right now. I had a pretty big down day. We'll see if it continues. Here's the trend line that's going to be absolutely key. You know, it breaks this trend line, then I think it will finally come down and test this 90, which I was expecting back over in here when I thought it was rolling over. And if we break this trend line, then we're definitely going to get that. And then let's take a look at Lululemon. All right, Lulu's trying to break out of this downtrend. Had a big move on huge volume here back in early September, mid-September. Almost the opposite of what happened in June with the big volume, the collapse, and this was the big rally, okay? So what's going on with Lulu? It's kind of hard to tell, honestly. The weekly, you can see this. This almost looks like a very big rounding top, okay? And that's just the way it looks to me. And I don't know, I got to get out of this. Again, I cancel out. Let's go with this. Software kind of cramps my style a little bit. So this is all the trading I've got on Lulu. I'm not sure if there was earlier than 2007 or not, but actually, yeah, no. Anyway, so, but the only thing that, you know, even though the rounding top, we are getting some divergence that came in on this move down here, okay? The indicators did not confirm it. And so that's why I think we, instead of continuing down, we kind of move sideways, and it's trying to make an effort to rally. I'm just not so sure, but you know, we'll have to continue to watch it. I'm just really a little skeptical. And Lulu's one of those that'll just rip your head off if it goes the wrong way on you. Yeah, I mean, like, oh, you could think, oh well, maybe it's turning, and then wham, you know. And you know, of course, this was starting to downtrend, and then you know, nice up day, and then wham. So it'll hit you. And so I'm a little skeptical. I mean, we do have the 55 slightly kind of flat to slightly rising, the 21 above the 55, the 10 above the 21, but we got a pretty hard down 233. And so I'm just, you know, not willing to take a position on Lulu. I'm just going to continue to monitor it right now. And Whole Foods is the last one, and it is doing nothing. It is in basically sideways mode down in here and just chopping sideways and kind of consolidating. I don't think I have a Whole Foods weekly. Oh, I do. Okay. Let's take a look. It's retraced, you know, when you, big move. Okay. Look at this huge move from late 2008, you know, huge rally. And now it's retraced almost 50% of that move. Okay. But again, the fact that it's just kind of doing nothing, going sideways, and especially on the daily chart, I just have a hard time, you know, doing anything with it. And so we just got to wait to see, you know, it's kind of in this box down here. So, all right, that's it for today. Kind of went long, had a lot to talk about. I'll be back with trade ideas tomorrow, and we'll kind of go from there. And if you felt like the video was helpful, please share it on social media. If you're not a subscriber, subscribe. Hit the little red box here at the end if you've watched the video all the way through. Hopefully you have. And just first name and email, and you'll be good to go. All right. Thanks, everyone. We'll talk to you again tomorrow.